Okay, actually, I think we will go through the markets right now. We'll start with the BRVM. The BRVM 10 index yesterday closed trading at 218 points. That's up just about 0.05%, while the all-share index, which is the BRVM composite, gained about 0.2%, closing at 196 points. Total value traded on that market was 1.2 billion CFA francs, and the currency currently trading at 506.9 to the US dollar. Now let's move on to Ghana. Ghana, we saw the market down slightly. Of course, it has been rallying very strongly recently, but the GSE composite closed at 1,782 points, down about 0.25%. The year-to-date change for that is now 48.6%, while the GSE Financial Stock Index closed at 1,597 points. It's down about 0.2%. For the year, it is up about 54%. CD stable at 1.96 CD to the US dollar. Moving on to Nigeria, we saw the all-share index. Very good day in the equity market yesterday. We saw it up about 1%, closing at 33,432 points. It was lifted by a wide range of stocks, particularly Dangote Cement after it released its results for 2012. We saw some interest there, and we also saw some interest in the banking space. The likes of First Bank also moving higher yesterday. Now, foreign portfolio investments into Nigeria's equity market have also slowed down in the last month. And to get a view on how investors are thinking about investing in Nigerian equities, we have in the studios Akinbamidele Akintola, who is with Africa Equity Sales at Renaissance Capital. Thank you so much, Akin, for joining us on the show. And maybe we should start on that point. Your thoughts about the appetite for Nigerian risk right now, particularly equities. Clearly, there's a lot of interest in the bond market. It has waned a little bit, given where yields are now, and maybe some concerns around the currency. But do you think the appetite for equities remains robust at this time?
Well, obviously, we've had a very great demand in the earlier part of the year, and I think that's kind of slowed down now. But obviously, what were the key drivers is obviously we expect full year numbers. Now we're expecting first quarter numbers. I'd expect that obviously once the first quarter reporting season is over, we expect to be at least some lull in the market, you know, in terms of volume, and obviously we'll see that pick up as well when the first half numbers come out.
But in your view, what does that mean for the trajectory of the index, though? Do you think we're likely to trade flat?
I think likely the index might trade flat. I think that underlying there's still strong demand. I just think that people are just not willing to stake, you know, how aggressive do you want to get. Okay.
So what are they waiting for? Is it more of a macro issue?
More of triggers. You know, if you look at the market, there's always triggers that, you know, you realize people buy a lot in the early part of the year before full year numbers. You realize that people also wait to see how all the first quarter numbers come through, which are coming through now. Obviously, then they will react as to how do we want to rebalance our portfolio. You know, obviously, you take that view into second half and then you revisit. So you have to look at trigger points in the market and where these material news will come in for every stock.
But when you interact with the foreign investors these days, are they pointing to macro issues like the currency? We've seen a little weakness this week. The Naira closing and testing 159 in trading yesterday, and we'll get to talk about that later on the show. But your thoughts about any macro issues that are worrying foreign investors these days?
Well, I think obviously currency is important. I actually do not still, if you obviously look at our research report, we have a full year Naira band is 160. We've put that. We think that Naira might depreciate a bit this year, but we think 160 is the band, and obviously we're still within that band. I don't think that the stance of the CBN will be to have the Naira depreciate beyond that band. Right. I think it's very importantly, the message that Lamido has put to the market is the Naira will stay stable, and I think it's very important that, you know, for consumer stocks, you know, we don't need Naira devaluation. So I think that band will remain there. There might obviously be see Naira drip a little bit, but I think long term for the year we'll stand by our assumption, which is 160.
Okay, so let's talk a bit about the stocks, and particularly in the consumer space. And I think an interesting point that you were making earlier was the fact that we really need to break down the consumer story into food companies and non-food companies. Yeah. And in your view, the likes of Nestle, for instance, Rencap has put a target price of 1,000 Naira for that one. Some people think it's pricey already, but obviously you think that there's still some upside there. Your thoughts on navigating through the consumer story in Nigeria, looking for investment opportunities?
Okay, I mean, by and large, you know, the general sentiment is that obviously consumer stocks are expensive. But if you look at the market, right, in terms of fundamentals, I think the consumer stocks have defied every threshold for what fundamentals stand for in terms of valuation. Will these stocks stay expensive? Yes, they will. what kind of demands are we seeing? So you have to look at it in two ways. You have foreigners, you have the locals. Locals have been in this market for years, and they own these stocks. Okay. However, with the way these stocks have run aggressively, and obviously with the free flow liquidity, because obviously most of these international companies are, Nestle and the likes are owned 50% by their parent or more. The likelihood of you selling now and obviously being able to buy back, because obviously volumes are thin, there's a risk to that. So effectively, the locals would rather hold their stock. Okay. On the international side, we think they are net buyers of consumer names. Okay. Right. Maybe they will not chase it at higher levels, but they are net consumers because they think that that's the true depiction of the Nigerian economy. So I still think there's underlying demand for consumer stocks. And I was just saying that obviously in terms of performance, so we need to look at segregation of food producers and non-food. We realize that obviously with the food producers, they're largely still growing at 20% on a year-on-year basis. You're seeing that story different for non-food. Obviously, if you look at the challenges of
PZ,
exactly. Now, what does that tell you? Is people will eat. People will always eat. People will always drink. Okay. However, will people have to wash them out 2 times a day, or will people have to take their showers 2 times a day? I don't think so. However, when you now look at obviously a global fund manager, what he's looking at the germ space, and he's saying, okay, in China, manufacturing companies are still going at 2 to 5%. Okay. In Nigeria, you still see 20 plus, and you think, okay, we can think.
So
okay,
that
justifies why you need to be here. Now. Okay. However, you might still pressures in terms of what happens in the bottom line in terms of cost of raw materials, but I think that those are short-term things. Those are things that's synonymous with the market. They're things that's synonymous with the global market. But as long as you're still seeing that growth, I think it's something that you.
How do you compare the demand for Nigerian equities to? I know, for instance, RenCap is now covering companies in Ghana, particularly the banks. So, your thoughts on the interest we're seeing across Africa right now, and where Nigeria sits in that?
In terms of sub-Saharan Africa, obviously Nigeria is the biggest market, and obviously we're seeing, for most investors who are Africa focused, you'd realize that probably 34 to 40% of the portfolio is sitting in Nigeria. That would be followed by Kenya. Kenya has also seen decent activity, but if you want to look at it from a bank standpoint, is most of the banks in this space are more expensive than the Nigerian space. Kenya banks are probably trading at 2 to 3 times book. Ghana is equally the same. But however, Ghana obviously remains a small market in terms of liquidity. So Nigeria will obviously still remains the main ball or the main attraction for investors, at least in the
final point on where investors are putting their money right now. We've talked about the consumer stocks. Of course, the banks have always been a major interest. I mean, when you interact with investors now, where do you see the greater demand with respect to financial and non-financial?
Well, I think obviously banks is obviously 30% of the market. Danksem obviously still has, liquidity in Danksem is thin, so you take that out. I think by and large there is huge demand for consumer space. However, obviously finding those blocks is a bit difficult.
That's always the challenge.
That's always the challenge. I think banking is obviously very, very fluid, so you can easily, people typically pay that. And obviously with the Q1 numbers and all of this, I think we'll still continue to see, I think the trends will still remain the same. And like it's always been, is banking will always be the more liquid side of the market, and then obviously, but the underlying demand still remains robust.